Well, I want to shift gears a little bit and talk about some of the stories that came across the weekend. First, 50-year mortgage is being proposed. I guess that the story that I read on this is that Bill Pulte, head of the FHA, Federal Housing Authority, former CEO of Pulte Homes or whatever, came into Trump's office in Mar-a-Lago and came in with a couple poster boards. And this was one of the posters, that this image of FDR, President Roosevelt, and then and Trump, and next to President Roosevelt, they have 30-year mortgage, and then next to President Trump's picture, 50-year mortgage. At the top, it's great American presidents, which again I find humorous because FDR, I can see why Trump likes FDR, but and on one hand, we're talking about the evils of socialism, but then we're talking about the Great New Deal and FDR and a lot of kind of more, I use air quotes, socialist policies that I think a lot of people can argue whether they're socialist or not, or they're just, more like welfare policies. Not the point. Any initial thoughts when this came out? I want to go into the details of some of the unintended consequences and also just the practicality and the demand of the 50-year mortgage. There's a lot of opinions. Did you have any initial thoughts when you saw this, or did you think it was real?
Yeah, I mean, my initial thought was more so just the photo. Yeah, just the photo with him and Roosevelt. I thought was funny. I mean, for a lot of the same reasons of like you couldn't talk about, I guess, like two more different individuals, at least in terms of the presidential sense.
Yeah. Other than, I mean, I think they both enjoy power, but yeah. They're both populist presidents.
Yeah. I think to me, one thing, I think this came out, or at least I saw the posts around it on Saturday, and in my head it was like, the government is still shut down, correct? Like this is still,
but this is what we're working on.
Yeah. Like, I mean, I can't blame the administration for like, okay, we need to think of other stuff going on. But I was like, the government is still indeed shut down.
Yeah. Is this a sign of not being serious about the housing crisis? Or is this like, do you think this is because I've read that like the rest of the White House was not at all read in on any of this proposal, wasn't vetted, wasn't like discussed. Is Bill Pulte rolled in with a poster board and Trump's like, that's great, took a picture of it and posted it on Truth Social.
Yeah, I mean, with him being in the political space for, I think, going on 10 years now, for the most part, there are things where it's like, well, he did talk about this, or he has mentioned this, or he has had a weird fixation. This one was surprising because I've never really heard him talk about making massive changes to the mortgage industry. And if so, like one of his complaints, I don't think I've ever heard being, it's not long enough.
He may have made that complaint before.
Okay. So I think, I don't know. I'm not surprised to say that it's that was a swift decision, but also I definitely don't think it was well thought out. I don't think any meaningful changes are going to, I'm curious to know what meaningful problems are going on in the housing industry in his mind, and how this was going to solve it, or if he even intended this to be like the solution.
Yeah, you'd hope not, because it certainly appears to be more of a more of like a Band-Aid in curing a symptom rather than the problem. And it's not even curing the symptom. In fact, it could make the symptom worse over time, because what effectively this does, and we talked about this before we started before we press record. The effect of 50-year mortgage, and whether it's the term or the amortization period, and no one's even got into that type of nuanced discussion. I guess typically residential mortgages, the term and the amortization period are the same. But the effect is like the same when we look at buying a multifamily property. We would love to get a longer amortization period. oftentimes in multifamily, you can get a 30-year amortization. Other types of commercial real estate, it's only 25. And then on like some Fannie and Freddie, but HUD 223F, you can get 35-year amortization periods, which make the the mortgage payment less. And the same reason why we go for interest only, it decreases our we don't have to pay any interest. It lowers that monthly payment that allows us to have higher degrees of cash flow. It's because it's an investment property with a goal of producing cash flow. So from like an investment standpoint, having a low monthly payment where you're going to typically be forcing appreciation to the asset, or hopefully you're buying an asset in a high appreciating market of where you're not relying on amortizing the loan or paying down your mortgage as your primary method to build equity. But for a lot of single family homeowners who are buying it to own and live in, you're not going to be building any equity. Now, it's true that most people still don't live in their home for 30 years. Most people sell their home within, I think, 7 years is the average time someone lives in their home. So it doesn't really matter what the term is, assuming that there's no prepayment penalty. You're just lowering that monthly payment. But if you're lowering that monthly payment, it allows people don't buy based on the purchase price of the home. The primary metric is, what is my monthly payment going to be? What can I afford? And so if you can get that payment lower, that just allows people to buy a house with a higher purchase price, which drives up the cost of housing, so we're going to be back to the same exact level of affordability in very short order, but then it continues to accelerate and homes only become more and more expensive. So the end consequence seems to be we're making the situation worse, not even better.
Yeah, I mean, I would.
Sense.
No, I don't disagree with any of that. And I think I say it's a Democratic policy because I've not heard a Republican push for rent control. But for everything that we talk about with rent control and people in the multifamily industry, I'll say that, okay, that's great. You're capping rents, but expenses are continuing to rise. So you're going to have a lot of landlords that would otherwise exit the space. Also, depending on the jurisdiction, you're going to, de-incentivize people to build, all sorts of that stuff.
Yeah.
And also, the main argument is just like it's not going to do anything. And I think this is, I say this because Trump is a member of the Republican Party. To me, this feels like I don't want to say their attempt at rent control, but their attempt at something that does not address, much like rent control, the fundamental issues of why people are finding their rents or just costs of housing to be out of control.
We need more supply. I mean, this is going to help. Talking or listening to some folks that are in the mortgage industry, more on the debt side. It's who wants to be selling, trading, originating 50-year paper. I mean, 30 years is long enough. 50-year paper is a long time, and you might have to potentially, because there's so low demand, charge interest rates that are to a level of where that affordability is wiped out anyway.
Yeah.
But it's a product. I mean, the 30-year mortgage, you could often argue, it has been argued, it's really more of a product for banks to sell people. It allows banks to sell more mortgages and more have a product to sell to everyone. And this seems like it's a introduction of another product for banks to sell. And for home builders, it's a loan product that can allow individuals to buy more homes, but those people can already afford to buy a home. Now they can just maybe buy more homes. So I can see why Bill Pulte would be a fan of this, because it's like, hey, more home buying, that's going to be great for Pulte Homes. I'm sure he's divested or it's in a trust or whatever. There's no conflicts, but again, there's got to be a little bit of a conflict there.
Yeah.
I don't see how this helps the consumer or the home buyer or helps the housing industry. And so let's see where Business Insider wrap things up. Why Trump's push for 50-year mortgage could backfire. 3 points. It's not going to help the housing market in the long run. Longer mortgage term might make monthly payments a bit cheaper, but it won't address housing supply, and it could actually backfire pushing up home prices. That's all what we talked about. But yeah, again, and then just, is there an even demand in the mortgage market for this type of product? I don't really think that there is. Any other thoughts on 50-year? My question was, is there going to be a 50-year amortization for multifamily? Because I mean, again, they have the same impact. On the one hand, you go buy a deal tomorrow, I'll take the lower payment. I'll take a couple more years of interest only for cash flow. But I also know that if I can do that, someone else can do that, and it's just going to increase the price of multifamily.
Yeah, I think there's a lot of the, I guess, concerns that the policymakers have over housing. And depending on what some people say, I think you can tell whether they have a good grasp as to like what's going on with, I guess, with housing, or I guess what's the crunch for people that are trying to buy a home. But in the case of, the 50-year mortgage, somebody on LinkedIn kind of did a breakdown of like, if you did a slightly higher interest rate or what have you, you amortize it, you could be looking at a savings of like $200-300 a month. And at face value, it's like, well, great, there's savings there, but what is the meaningful amount of affordability for, and how that changes for somebody that gets the $300 a month? What does that allow them to do that they otherwise weren't with the 30-year mortgage? And also, I think it excludes for a lot of people that feel like they can't own a home. Are they making any meaningful adjustments to the down payments and how they feel about that, and also just the other costs of home ownership? Something that I've not understood is when we look at the cost of owning multifamily apartments, we factor in cutting the grass at the property as an operating expense. There's a bunch of expenses to own and maintain the apartments as an operating expense. And yet when people talk to you about why housing is such a great long-term investments, they're talking about, well, you buy it and it appreciates, and 30 years later when you go to sell it, that's where it is. And I get it. People aren't going to keep track of it, but property taxes for us are an operating expense. Homeowners should treat what they pay in property taxes as a homeowner's expense, or as an operating expense.
I mean, I think sometimes, like the mortgage, they'll try to estimate, taxes, insurance, and your principal and interest.
Yeah.
But to your point, there's a lot more costs that go into owning a home, and when you do the analysis of like, okay, can I afford this home? You're taking all of those ongoing operating expenses and all capex. It's not being considered at all. It's just, can you pay property taxes, insurance, and your P&I, which is that's what the lender cares about.
Right.
Can you pay enough to, pay me, pay the government, and an insurance company, so if you burn the place down, at least they'll be able to recover it. But if you had to say, hey, we have to, replace, there's going to be, probably $10,000 to $15,000 and, capex every single year. Utilities are going to be, $500 a month, just general operating costs, lawn care, trash, all of that's going to be X $100. I think there's a reason why realtors and Redfin and Zillow don't include any of those costs or even estimates for any of those, of the true cost of home ownership. And even all the charts, that we see today comparing the cost of home ownership versus the cost of renting, they typically are only including, sometimes just principal and interest, sometimes not even taxes or insurance. Sometimes they might lump all three in, but you're not including, all of those other costs. Where I guess, and to be fair, on renting, there's other costs also. Can be some other fees. You can have, they're not always including utilities. Mm-hmm. But the potential costs kind of stop there. Whereas, if you own a home, it's kind of uncapped. Well, it's not completely uncapped risk, but you can spend a lot of money pretty quickly.
Well, as I said before, the amount of people that are, making up more and more of the workforce, entering the workforce, that are paying off student loans, that already have a monthly payment that they're worried about, and that they're more focused on getting that payment off their backs. How many of those people are like, hey, now that I've got some free cash, I'd finally like to own a car, or I'd like to stop driving the car that I've been driving since high school and make it an upgrade there. And, the Dave Ramseys of the world can say that's stupid, don't do that, a home is a better purchase. But at the end of the day, that's the decision that people make. And I don't, I think a lot of attempts are at at making home costs more manageable and more affordable are better than just kind of putting our hands up and saying there's nothing we can do, but also a longer amortization term that saves people $200 a month. I would just kind of say don't be surprised when that doesn't make any meaningful change, if at all.
Yeah. Good point. And even Trump himself says there's probably not going to be a whole lot of meaningful changes. He says it's not a big deal. Don't worry about it. It's not. It's just a little bit cheaper. It's a little bit cheaper. It's not a big deal.